Welcome back to BitcoinDorks. Today, we're diving into some significant developments surrounding Mt. Gox and a massive transfer of Bitcoin worth billions of dollars. Let's get started. For those who may not be familiar, Mt. Gox was once one of the largest cryptocurrency exchanges in the world. However, it infamously collapsed in 2014 after losing approximately 850,000 Bitcoins, valued at around $450 million at the time. This incident resulted in bankruptcy for Mt. Gox and left thousands of users out of pocket. Since then, Mt. Gox has been undergoing a lengthy rehabilitation process, overseen by a trustee appointed by the Japanese court. The goal of this process is to compensate the exchange's creditors by distributing the remaining assets, primarily in the form of Bitcoin, back to those who lost funds in the collapse. Recently, reports have revealed that a massive transfer of Bitcoin has taken place from Mt. Gox's rehabilitation fund. According to these reports, approximately 40,000 Bitcoins, worth over $5 billion at current prices, were moved from one of Mt. Gox's wallets to an unknown destination. This transfer has sparked a flurry of speculation and concern within the cryptocurrency community. Many are questioning the motives behind the transfer and what it could mean for the ongoing rehabilitation process and the broader cryptocurrency market. One possible explanation for the transfer is that it could be part of the trustee's efforts to prepare for the distribution of funds to Mt. Gox's creditors. As part of the rehabilitation plan, the trustee has been tasked with selling off a portion of the remaining Bitcoin to reimburse creditors who lost funds in the collapse. This transfer could be a step towards facilitating that process. The destination of the transferred Bitcoins remains unknown, adding to the mystery surrounding the move. Some have speculated that the Bitcoins could be sold off on the open market, while others have suggested that they could be moved to cold storage or another wallet for safekeeping. Regardless of the reasons behind the transfer, one thing is clear: it has reignited interest in the Mt. Gox saga and its implications for the cryptocurrency market. Mt. Gox's collapse was a watershed moment in the history of Bitcoin, and its aftermath continues to reverberate throughout the industry. The collapse of Mt. Gox wasn't just a financial setback. It was a seismic event that shook the very foundations of the cryptocurrency world. Thousands of investors, from seasoned traders to newcomers, found themselves facing the harsh reality of losing their hard-earned funds, often with devastating consequences for their financial well-being and emotional stability. In the aftermath of the collapse, these investors were left in a state of limbo, grappling with feelings of anger, frustration, and betrayal. They placed their trust in Mt. Gox as a reputable exchange, only to have that trust shattered in the most catastrophic way possible. Since then, they've been caught in a legal and bureaucratic quagmire, navigating a complex web of court proceedings, bankruptcy filings, and rehabilitation plans. All while clinging to the hope of someday recouping their losses. However, the road to recovery has been anything but smooth. Delays, setbacks, and uncertainties have become the norm, leaving investors in a state of perpetual anxiety and uncertainty. The process has been marred by legal disputes, technical challenges, and regulatory hurdles, further complicating an already fraught situation. At every turn, investors have been met with more questions than answers, more obstacles than solutions. The recent transfer of Bitcoin from Mt. Gox's wallet serves as a stark reminder of the complexities and challenges inherent in the rehabilitation process. It's a sobering reality check for investors who have been holding out hope for a swift and equitable resolution. The movement of such a significant amount of Bitcoin raises a myriad of questions. Where is Bitcoin going? Who is behind the transfer? What does it mean for the future of the rehabilitation process? For many investors, the transfer evokes a mix of emotions: hope, fear, frustration, and uncertainty. On one hand, there's a glimmer of hope that this could be a step towards finally receiving some form of compensation for their losses. After years of waiting and wondering, any sign of progress is cause for cautious optimism. On the other hand, there's a lingering sense of unease and apprehension about what the future holds. The transfer of such a large sum of Bitcoin could have far-reaching implications for the market, potentially affecting prices and investor sentiment. In the midst of all this uncertainty, one thing remains clear: the need for transparency, accountability, and swift action in resolving the Mt. Gox debacle. Investors deserve answers, they deserve closure, and most importantly, they deserve justice. As they continue to navigate this turbulent journey, they're looking to the powers that be, the courts, the trustees, the regulators, to deliver on their promises and uphold the principles of fairness and integrity. But beyond the immediate concerns of Mt. Gox investors lies a broader lesson for the cryptocurrency community as a whole. The Mt. Gox saga serves as a stark reminder of the risks inherent in the world of cryptocurrency, from the volatility of the market to the vulnerabilities of centralized exchanges. It's a wake-up call for investors to exercise caution, to do their due diligence, and to never place blind trust in any single entity, no matter how reputable they may seem. It also underscores the importance of security and accountability within the cryptocurrency ecosystem. While Bitcoin and other cryptocurrencies offer many benefits, they also present unique risks, particularly when it comes to storing and managing large amounts of digital assets. The cryptocurrency market is constantly evolving, and incidents like this serve as a reminder of the need for robust security measures and transparent governance structures. Thank you for tuning into BitcoinDorks, and we'll see you in the next video.